So in this lesson, we're going to focus on the advanced breakout strategy one more time, the ABO strategy, and we're looking to focus on the execution of the ABO strategy. Where we're going to enter, where do we place our stop losses, and where do we place our targets. In the previous lesson, I went into detail explaining what exactly the advanced breakout strategy is and what are the characteristics on the higher time frames and on the lower time frames of the advanced breakout strategy. I'll briefly dig into that right in this lesson again, just as a refresher, but mainly we're going to focus on how to actually enter this setup, how this strategy, how to execute it. So with that said, let's have a look. So the execution of the advanced breakout strategy is pretty simple, right? With the IBO and the CBO, we have two entry types that we can utilize. We can utilize an entry order, and we can also utilize a live market entry, right? Typically, we place an entry order when the setup is beautiful and has a lot of support and resistance and so on, such as with the CBO setups. The live entries we typically utilize when we want to wait for specific reversal candlesticks, specific rejections, specific momentum to come in, and so on. This strategy, the ABO strategy, the only entry type that we will be using is the live market entry. We will not be placing any entry orders on the ABO strategy for a really good reason, is that we need to see momentum. We need to see that specific levels are being rejected and that we have this breakout on a lower time frame, right? And we cannot really enter an ABO blind like we do with an entry order on a CBO, as an example, on a complete breakout. So that is why with an ABO, with an advanced breakout strategy, we are only going to execute it with a live entry. Okay, so with that said, when we look at the chart here, I'm going to focus again on simply explaining really quickly what the ABO is, going over the same example in a little bit more detail, starting on the higher time frames. So if we look at the higher time frames, again, criteria number one, what do we need? We need some kind of a major support and resistance level. That is exactly what we have here. You know, we have this major support level. So at the time of the entry, or at least when you're making your watch list, this is what the daily chart look like, right? Exactly like that. So we want to make sure that we have some kind of a major support and resistance level in an area that we're rejecting. In this region, you can see that obviously these previous lows were acting as a really good support, but we can also go a little bit lower, right? We can toss in a second level right here and will act like a zone, because you can clearly see that the wick of the previous day right here hit roughly 81.5. That was beautifully rejected right here. It was rejected right there. One more time over here. So it's kind of a zone, right? We have multiple rejections from this zone, but we want to zoom out and obviously go a little bit deeper into the analysis to see if we have any more rejections. And even in this period in time, we have rejection over here, 2008, another one, 2009. We have a couple of rejections in there, but they're not clean. We have another rejection right here. That is number 3, number 4, number 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. You know, so we have over 10 major rejections off of this horizontal support and resistance level. That is again criteria number one. We need some kind of a major support and resistance level, not a minor, preferably a major support and resistance level like this, right? Criteria number two is, do we have some kind of deceleration on that support and resistance level? Remember, we do not need a reversal candlestick formation here, right? We do need it with an IBO, we need it with a CBO, because there's a little bit more development with those two strategies. With an ABO, the ABO strategy happens right at the beginning, right? Before the trend even develops on a lower time frame. So based on a multi-time frame principle of run on a higher time frame is a trend on a lower time frame, if the trend on a lower time frame is just developing, is just beginning, that means we're not going to have specifically a reversal candlestick formation on a higher time frame yet. That's why criteria number two is deceleration. We want to make sure that we're slowing down at that support. And in this case, we are. And even by going a little bit deeper, you can even say that we do have a reversal candlestick formation. That's in this case. We're not always going to have it, you know, but we want to make sure that we're slowing down, decelerating at that support level. And in this case, we are. So at the same time as we do our daily analysis, and make sure that criteria number 1 and criteria number 2 is met. At the same time, we also want to look at the higher time frames, such as the weekly and the monthly, to gauge that larger perspective, that larger point of view, right? In this case, this is a pullback play, right? So we want to see, is the momentum on the higher time frames on our side or is it against us, right? Because if it's on our side, then we can push it a little bit farther. Maybe we can take it up to the daily 20 EMA, or we can draw our Fibonacci retracement level, since it's still a pullback, and potentially take it again to 0.32 Fibonacci, which lines up with the daily 20 and the previous lows, right? But in order to do that, we need momentum on the higher time frames. We need to be trading with some kind of momentum on the higher time frames. And in this case, the monthly chart has a massive bearish engulfing, rejecting this monthly 50 EMA level, breaking a trend line if you connect these lows. Right, so we don't really have any bias on a monthly time frame that is bullish. The monthly chart is fully bearish and it's accelerating. It's just beginning. The weekly chart, same thing. You can see that the weekly chart wasn't a bullish trend, but we formed a top. We developed a triple top price action pattern right here, and then we broke down, breaking the lows, right? So this is kind of like a CBO strategy if it pulls back, right? With the monthly momentum at the beginning of the monthly run, break and retest of the 4-hour of the weekly 50 EMA and end of the daily 50 EMA if it pulls back. So if it pulls back, this is a CBO setup. But the thing is, at the time of the entry, the weekly chart was looking literally like this. You know, we're just developing that week, and this is what the weekly chart looked like. So we don't really have any weekly bullish momentum. Same thing on a monthly chart. We don't have any bullish momentum on a monthly chart. So this is simply a pullback play, quick in and out position. That is, again, we want to check the daily chart first, make sure that our criteria is met, and then we want to look at the higher time frame to see if we're actually trading with the higher time frame bias or against the higher time frame bias. And if we're against the higher time frame bias, then it's still okay to take the trade because the daily and the lower time frames are good, but they're just quick in and out positions, right? So that's the higher time frames. Now, the lower time frames. Criteria number 3. Is the lower time frame trend, specifically the 1 hour chart, the 1 hour trend coming to an end? Do we have some kind of a price action pattern? So if we zoom out, obviously the 4-hour chart, we can see that the 4-hour chart has been moving downwards for quite some time. We're not at the beginning of the trend here. We're not taking a bullish move at the beginning of this trend. It's already been trending for quite some time. You know, so I would say the Elliott wave theory doesn't really apply here very clearly. It's kind of messy in general, right? Yeah, it's kind of a messy trend. So the Elliott wave theory doesn't really apply to messy price action, but in general, it's been trending and moving downwards for quite some time. So I can say that, yeah, you know, chances are that this trend might be coming to an end soon. On a 1 hour time frame, it's the same idea, but on a 1 hour chart, that's when we want to make sure that that pattern is actually developing, some kind of a price action pattern: descending triangle, ascending triangle, falling wedge, rising wedge, symmetrical triangle, double bottom, head and shoulder pattern, all that good stuff, right? Price action pattern lesson. And we're taking a breakout, right? So that is criteria number 3, making sure that everything's actually decelerating and slowing down on that lower time frame, making sure that that trend is coming to an end and that we're decelerating with some kind of a price action pattern. Criteria number 4 is, do we have enough room up to that 4-hour 50 EMA? This is a pullback play. We don't have any higher time frame bias. So the safest target with an ABO is the 4-hour 50 EMA. Same thing with an IBO, right? With an IBO, the safest target is the 4-hour 50. With a CBO, the safest target is typically the 4-hour highs or the 1 hour low or the 4-hour lows, depending on which direction you're going, right? With every single one of them, we can push them farther if we're trading with the momentum, with the trend. But in this case, I wanted to show you the other way, what happens when we're trading against the trend, because those are a little bit riskier, right? So I want to really showcase what the safest targets are. And in this case, the safest target with an ABO is the 4-hour 50 EMA. So we want to make sure that at minimum, we have a 2-to-1 reward risk ratio targeting that 4-hour 50, right? So I'm going to take you again to the beginning of this setup. That was right here. On the 1 hour chart, it was right here. And on the 5-minute chart, that would have been here. There we go. So when you're position sizing your setup, right, you're always going to position size it to see if criteria number 4 actually fits, whether we have a 2-to-1 of reward risk ratio, right, up to that 4-hour 50 EMA. We're always going to enter somewhere on a 5-minute 50 EMA break after the lowest level is being rejected, right? The bottom or the tops if we're going short, in this case the bottom because we're going long, making sure that it's being rejected if we're looking at this 1 hour time frame, and we have momentum forming some kind of a candlestick formation pattern, which this is criteria number 5, right? But at this point we want to position size to see if we can actually get a 2-to-1 reward risk ratio. So we want to target roughly below that 4-hour 50 EMA, right? And we want to have a good stop loss below all lows, nicely protected, right? Putting us below the 4-hour lows, below the 1-hour lows, making sure that again our stops are well protected at all times. Doesn't matter whether it's an ABO or an IBO or a CBO, our stops always need to be protected. But in this case, it's not the same criteria as with an IBO or CBO where we're using our Fibonacci retracement for stop placement. With an ABO, we're using the previous lows and the previous highs for stop placement and making sure that we're actually protected below the previous lows or above the previous highs if we're going in the opposite direction, right? So in this case, we're well protected and we can generate a 2.78% reward risk ratio up to that 4-hour 50 EMA. We can even go wider on our stop losses, right? If we want to be even safer, because at minimum, the reward risk ratio that we're looking at is 2-to-1. Obviously, it's nice to have higher reward risk ratio, but if we want to be super safe, I mean, we can go wider, have a much wider stop loss so that we're actually literally targeting a 2-to-1 reward risk ratio. But, you know, sometimes it's just too wide. It's a little bit ridiculous. So sometimes, you know, we just want to make sure that we're not choking it. We're not like right below it, but we're well below it, you know, still kind of well protected. So in this case, you know, 40 pips, in my opinion, was good. And that was giving us a 2.78, 2.75 roughly reward risk ratio. That's criteria number 4. That is met, right? Enough reward up to that 4-hour 50 EMA. Number 5, momentum, candlestick formation. On the 1-hour chart, 4-hour chart, that's the breakout. Number 5 is actual breakout, right? When we're breaking out of this price action pattern on the 1-hour chart, we want to make sure that we're actually breaking out with some kind of momentum on that 1-hour time frame. That is criteria number 5. So if we look at this 1-hour chart, again, bullish engulfing, we need some kind of momentum, some kind of candlestick formation that is rejecting the bottom of the price action pattern, right? And breaking out of it, right? So sometimes that's going to look like a low test and then followed by a big bullish candle breaking out. Maybe a tweezer bottom followed by a big bullish candle breaking out, or a bullish engulfing, right? Breaking out right away kind of thing. So we always want some kind of a candlestick formation that's giving us rejection, momentum, followed by a breakout, right? That is criteria number 5. And we want the same thing on a 4-hour chart. So we want to make sure that the 4-hour chart, just like with an IBO, CBO, the 4-hour chart is on our side, right? So this is, we're literally catching the bottom of the trend, right? So we want to stack as many confluence factors as we can. And in this case, again, breakout, meaning low test, some kind of momentum on a 4-hour chart as well. So this is what it looks at the time of the entry, right? This is exactly what we need to see at the time of the entry. That's criteria number 5, momentum, candlestick formation on the 4-hour chart, 1-hour chart, actually giving us that breakout. And the last step is volume, right? So when that 5-minute break is actually occurring, right, that is when we're entering just as it breaks that 5-minute 50 EMA. We want to make sure that we're at high volume for the day, not at low volume. We want to make sure that the volume has increased and is actually spiking. So that is when we want to enter, when all of this is actually lining up. At this point, great trade. Everything is here. We can go live, right? And if we fast forward on a 4-hour chart at this point, you know, the explanation is finished. This is what it is. You know, it's pretty simple when you follow the guidelines. And, you know, we're just looking for as many confluence factors as we can, right? We're stacking up those confluence factors, making sure that because this is a pullback play, right? This is in general, an advanced breakout. That's why it's called an advanced breakout, because it is a breakout and it's a little bit more advanced. Whereas the initial breakout, still a breakout, but it's already confirmed. It's the initial breakout. CBL, complete breakout, because that's the break of the 4-hour 50. This is the advanced breakout because it happens right before those two, right? It's the first thing. The advanced breakout is the first setup that we can ever enter a position with, right? It's typically the ABO followed by an IBO followed by a CBO, and the next strategy that we're looking at is the ACB, which will come after the CBO, right? So that is how this ABO strategy looks like. This is how we want to execute it. So on the 4-hour chart, again, after the trade was taken, beautiful 4-hour 50 EMA was hit right there, So 1-hour chart, let's fast forward. And a lot of times this is like a true day trade. If it's a pullback and we're targeting that 4-hour 50 EMA and we're not pushing it farther because the higher time frames are not telling us that we should push it farther, right? If we're pushing it farther, then obviously it could last days, maybe even weeks. But if we're just targeting the 4-hour 50 EMA, this is what I would consider literally a true day trade. Because a trade like this will typically last only a few hours, literally. Maybe half a day, maybe 4 hours, maybe a day at max, But ABO strategy is typically really quick in and out type of trading, right? So again, 1-hour chart, you can see that once that volume comes in, the momentum comes in, we get that breakout. This is when we continue going up. And on 5-minute time frame, again, we can fast forward on this 5-minute chart. I'll just let it play just so I can speak as it's moving. There's one little tweak that we can do because this is extra, right? This is extra when it comes to execution. At this point, the trade is already live, we're executed. That is what we needed to see to actually take in an ABO long, right? We need all that criteria to actually line up. One little tweak though is in regards to the stop placement, stop management, right? So here's a little management tweak. I'm going to put a trend, this horizontal level on the 5-minute chart. I'm going to make this horizontal level red. And this will be my stop loss, right? There we go. So we have this red line, which is in line with my stop loss. Once you can see the 5-minute time frame is breaking out now, right? So see, once it breaks the 1-hour 50 EMA, clearly, once we get a clear break of the 1-hour 50 EMA, which is at this point, the 5-minute chart just broke out, right? We're clearly above that 1-hour 50 EMA. At this point, you can remove all risk. So you can make this strategy pretty safe. As soon as you have that breakout, you can remove all risk and move your stop loss to just above or somewhere around your entry price, right? Like that. So all of a sudden, your stop loss is above your entry price. So if it ever pulls back, right, to sometimes it could be like a false breakout on a 1-hour chart, and then it pulls back to hit the lows again, right? We don't want that to happen. We don't want to be in a position if it's falling back down, right? So we want to make sure it breaks out and then maybe comes back to retest the 1-hour 50 EMA for an IBO, right? That's typically what this looks like now. This would be an IBOC, rejecting the 4-hour 50 EMA. So if our target is not hit, we want to make sure that it could still pull back to that 1-hour 50 EMA. I'm going to pause that right now. There we go, right? So we want to make sure if our target is not hit that we can still, it could still pull back to that 1-hour 50 EMA for an IBO setup, right? And that we're still protected. We don't want to choke the position, choke our stop loss too tight so that if it pulls back to the 1-hour 50 EMA, we're stopped out. So we never want to be in a position where we take our stop loss and literally move it right to the 1-hour 50 EMA, right? If you kind of follow my cursor. We do not want that, right? But as soon as that 1-hour 50 EMA is clearly broken, we can do a little trick where we can take our stop loss from, our original placement, which was down here, and actually move it up to above or around our entry price so that we're actually protected, right? And at this point, we removed all risk. There's absolutely zero risk in the setup, and this typically happens just when we get that breakout, so at this point on a 1-hour chart, just when we clearly broke out, and the thing is clearly broke out to the upside. That is when you could move your stop loss to just around your entry price to remove all risk. In case it's a false breakout, it could drop to the downside. We don't want to hold the position. We want to get out of it for break even or zero, no loss pretty much. So that was just a little stop placement tweak that I wanted to finish this off with. That is the execution of the advanced breakout strategy. That is what it looks like. So that is it for the advanced breakout lesson, right? The advanced breakout strategy is advanced, right? It's a breakout and it happens right at the beginning. Remember, we're catching the wave 1 breakout. So we want to make sure that the wave 5 trend, that the trend on a lower time frame, that wave 5 has actually come to an end, right? Because we're catching that wave 1 breakout. That is why it's advanced. Because with an IBO, we already have the breakout. With a CBO, we also already have the breakout. With those two, we're catching the wave 3 run. And with a CBO, either the wave 3 run or the wave 5 run. So we're already into the trend. The ABO is what develops the trend. It's what starts the trend. It's what starts the run or the pullback on a higher time frame, right? So the ABO, that's why it's a little bit more advanced. But again, if we look for all the confluence factors, making sure that all the criteria is met, right? A lot of the criteria is making sure that we're decelerating, that we're rejecting that support, that we're forming price action patterns, and reversal candlestick formations, and that we have volume at the time of entry, right? We're just stacking up confluence factors, making sure that that specific level is being rejected properly, right? So we want to have as many confluence factors as we can. And again, patience. I mentioned patience in the previous lessons as the major lesson for the ABO strategy. You want to be patient, you want to be picky, you want to make sure that everything is lining up, because if it's not, guess what? You could miss the trade, and that's totally okay, because the next strategy right after that is the IBO. If you miss an ABO because you're not confident with it, or it doesn't meet all the criteria perfectly, right? Skip it, it's okay. And just take the IBO, the initial breakout, once it occurs. That will have more confirmation. Or the CBO, So you don't always have to take the advanced breakout because it's a little bit more advanced. So if you're not comfortable with it, that's okay. Focus on the IBO first, focus on the CBO, right? Once you're comfortable with those two strategies, move on to the advanced breakout. I want to say advanced breakout is a little bit more aggressive, right? So you could potentially learn it after you learn the first two, because the first two are safer strategies. They already have breakouts, they're with the trend, right? But the advanced breakout is a really good strategy when you truly understand it, right? And you really are patient and look for all the proper confluence factors, all the criteria, making sure that all the criteria is met, right? And again, that is it. That is it for the advanced breakout strategy lesson. Hope you guys enjoyed it. This was the execution with a little tip in regards to the stop placement, managing with the stop placement. So that is it for this lesson. That is it for the advanced breakout strategy. Hope you enjoy it, and I'll see you in the next lesson. Take care.